Hey, good morning. Let's go over today's trade plan. So we saw that the weakness from yesterday afternoon carried over into the overnight session, but then responsive buyers were active at the 95 half support, which is a key inflection point. And at this point, ES is trading back into yesterday's range. Heading into the open, that 93 half to 95 half support is going to remain very key, and it is a very important inflection point. On the upside, we have pre-market resistance at 04 quarter to 06 quarter. That is the near-term inflection point, and above it, ES will be targeting a move up to 9 half to 12, and that's an area where sellers can still be active on first test. It's yesterday's breakdown spot, and on the upside, it is an important inflection point. So first test into 9 half to 12 is a good spot to take profit on the long side, and depending on how the market is shaping up and the type of momentum we're seeing in the market and the level of buying we're seeing in the other markets, 9 half to 12 can actually even be a good short, especially near the upper edge of that zone around 2111 to 2112. Beyond that, we have resistance at 14 half to 16 half, and ES can be short-term exhausted and cap the upside within that area. And again, 14 half to 16 half, especially the upper part of that zone, can provide a good tradable reaction, and responsive sellers can be active there on first test. And beyond that, we have 18 half and 1975, which is essentially the all-time high area. Not expecting it to go all the way back up towards the highs, but we can't really count out that scenario because on the larger time frames, the buy side is still more dominant. And if we start getting some decent buying in NQ, then it could actually trigger a pretty decent upside move in the S&P as well. So, as I explained yesterday in the recap video, the larger time frame market structure hasn't really changed, over yesterday. So yesterday we did see some decent selling, and it's a pullback within a larger time frame uptrend. But right now, that overall bullish structure in the market is still intact, and as long as we're holding 93 half to 95 half, the buyers can still maintain control, and we'll still have to be conservative and careful on the short side. Now, it doesn't mean that we can't take short setups. It just means the way you execute a short setup has to be a bit more conservative. Instead of shorting it at the lows or as it's breaking, it's still going to be better to take short setups either at very good trade location on first test of a resistance zone, or on a pop back up into resistance, or a short-term inflection point that may even develop in real time if there's a big disconnect in where ES is trading and where the internals are, or if the other markets really start breaking down. Because looking at TF, we know that yesterday we got a extended sell-off in the TF, but at the same time TF also sold off down into a prior balance area low, or very close to a prior balance area low. And we're seeing that buyers have been active in the Russell as well, and we want to see that theme continue. So in the Russell, we don't really want to see a break below the 41 to 44 area. If Russell starts breaking and liquidating below 1241, then that would certainly be a red flag, and it could lead to a sell-off in the S&P as well. So overall, the idea is that the Russell is also at support. Buyers are active in that market. Nasdaq is still relatively strong and actually holding on to its gains. And S&P tested a very key inflection point and a good support area in the overnight session. We've seen buyers active there. So for now, heading into the open, it's still going to be safer to focus on the buy side and focus on long setups rather than taking any aggressive shorts. The only time it makes sense to aggressively short the market is if there is so much underlying weakness and such a big disconnect that the 93 half to 95 half zone can break. Now, that is an important inflection point, and the expectation is for that zone to hold. But again, if there is big momentum on the downside and a big disconnect in advanced decline, and Russell starts breaking below 41, then the 93 half to 95 half zone may not hold, and then we can get a move down into 86 quarter to 88 quarter, where responsive buyers can still be active on first test. Below that, those zones are still going to remain valid and active because the larger time frame structure is still bullish. But in order to maintain that structure, ideally we don't get a break of 93.5 to 95.5. That would put that structure into question, and it could affect the larger time frame trend eventually, or it could be the start of a change in the larger time frame trend. So right now, heading into the open, the focus is still going to be more on the long side and 93.5 to 95.5, even though it's a zone that's been tested in the overnight session. It's a very key inflection point, and it can still hold even on a retest during the RTH session. And truly, if the market is strong or relatively strong, then ideally we don't even go back down into that zone, and we just kind of start balancing up here near yesterday's low, and then actually take off and break above 04 quarter to 06 quarter for a test of 9.5 to 12. Again, that's a spot where we can get rotation and a reaction, and from there we can still balance and eventually make our way back up to 14.5, 16.5. Doesn't have to happen on the day time frame. We are going to have to see the level of strength that we're seeing in the underlying markets, the level of momentum we're seeing, to really gauge the intraday context to see if that idea is still valid and can take place. But 9.5 to 12 is very doable as long as we're not seeing any continued weakness and extreme weakness in these markets. So again, the focus is going to be more on the long side, conservative on any short setups, and today we'll just be watching to see whether on the larger time frames ES can hold above 93.5 to 95.5 and then make a move back up to 9.5 to 12. That's the primary scenario. And then even if we see a lot of weakness, we could still get buyers active at the support zones below. So let's see if the market can maintain itself above initial support today, and we'll take it from there.